And joining me now here on set to talk about Nike and the consumer is Telsey Advisory Group CEO Dana Telsey. Dana, thanks for being here.
Thank you for having me.
So Nike's, as bad as it is, it's just given up its December gains and still way up since late September. So how bad is it?
I think overall, one of the messages that Nike delivered on the call last night that kept going over and over, more innovation, that they need more innovation in their product. And when you think about what we just did a couple days ago, we put out our 2024 outlook, and we said the road for 2024 is about innovation and value. What we're seeing out there, besides the headwinds of the macro of a weak wholesale, China uncertainty, what's happening with the consumer with rate increases, if you don't have newness and differentiation, you're not going to win the consumer in a big way. And I think that still needs potentially, given the amount of time that Nike spent discussing it on the call, that's an opportunity for them down the road.
What does innovation really mean for Nike, though, especially in an Olympics year, right? I don't, like, my kids don't, oh, this Nike shoe is really innovative. It's faster than that's not what you hear.
Right.
But it's still cool, right? I just don't know if the consumer is going to be spending on Nike type stuff in the year. Maybe with the Olympics they will.
Couple things. When I think about what innovation means, what's the new fabric? What's the new bell and whistle? What are the loyalty members doing? What are you doing to excite the loyalty members and bring them into your brand? What are the new category extensions that are out there? Because one of the things we've certainly seen with activewear, whether it's On Running, whether it's Hoka, whether it's Lululemon, whether it's Aloe, whether it's even Skims for some activewear components of it, there is a broader breadth of what activewear is. So you need to earn your way every single day.
What's driving the Nike brand now? Actually, you know, apparel looked like it did pretty well growth-wise compared to shoes. Shoes, you're not so much talking about fabrics, and I don't know if basketball shoes are still the driving force like they were 10, 20, 30 years ago.
I think they have a portfolio of brands that do well. Look at what they said about Black Friday weekend, that sales were up around 10%. It's the in-between times that they certainly need more to resonate or need more exciting marketing and some showcasing of the product. And I think there's more they're going to do with that. But I think the ability to capture that consumer, not just in seasonal times, but non-seasonal times, is the work in progress for Nike.
Is the consumer okay? And I'm not necessarily just looking at Nike, looking at Lululemon, looking at TJX, and I'm sort of worried about what happens when this gas price drop that has put more money in the consumer's pocket gets anniversaried, and it's not so much of a benefit anymore.
So I think it's easier to project now what profit growth is than sales growth. There's a lot of uncertainty now, and I think it goes beyond just the lower and middle income, but look at luxury. All of the luxury consumers' spend has moderated. When you think about the growth rate of services versus the growth rate of goods, services is still greater. We're hearing about, we have a big travel weekend ahead of us that people are participating in. That's a headwind. And I think even for the next couple months, because these rate increases are first going to take effect, even with Jay Powell talking about rates coming down in 2024, we still have to get from here to there. And the market looks to the future, and I think that's why you've had consumer discretionary stocks ripping over the past week or so.
What can you tell me about how discounting and inventories look at this stage in the shopping season? We're just about at the end.
Right.
I guess we'll see what the after Christmas sales look like, but have retailers discounted a lot, too much? Are their inventories perhaps sitting in warehouses?
I think inventories are very lean. You'll get Nike yesterday said inventory was down around 14%. Inventories are clean. Promotions are not out of whack. 30 to 40% off. Back in the day when there was a lot of promotions, you would see 50, 60, and 70 off. And you're going to come out clean. And I think the other thing you're going to see, companies transition to new season's product faster than they have before in order to gain full price sell-through. So inventory is not high.
If you're buying into the retail sector, maybe not the whole sector as a whole, a portion of it, which portion should you buy into now?
You want off price, you're going to get benefit from the trade down, and you're also going to benefit from better brands in there. I think you're going to buy some of the distinctive brands out there, some of them that haven't run, like a Bath & Body Works or European Wax, I think are going to be interesting too.